Eric Muathe, Muathe.com, with world market analysis for the weekend of February 4th and February 5th, 2017. Let's take a look at markets here. This is the close of Friday's session as far as Asian markets are concerned. That's a snapshot. Take a look at European markets at the close of Friday's session. See how they closed. And we can see pretty much a nice day for the most part. Take a look at the Americas at the close of Friday's session, or just about the close. And here we can see also a mixed bag. Let's take a look at those charts. What I'm going to do is I'm going to begin by taking a look at the Australian market and take a look at the monthly chart. In fact, I'm going to spend a lot of time in this video talking about monthly charts. For some reason, they seem to be speaking to me, so I'm going to spend some time discussing what they could be telling us. Beginning with the Australian market, and of course, as we can see, and we've been talking about this for many months, there seems to be some type of topside resistance on the monthly chart there. So that's one layer of resistance. Oh, and by the way, before I forget, let me wish one of my fans a happy birthday on the 7th. So Brock, enjoy your 38th birthday on the 7th. Thanks for your support, and remember, you are truly loved. Happy birthday and keep smiling. All right, let's continue on. Don't forget, as far as the Australian market is concerned, I've been talking about this backtest line that has been a problem throughout the last couple of attempts to move above this line. You can see ever since we broke below it. So ever since the break here, we've been trying to move above this line. Market still has not been able to close above the line. I think this monthly resistance line also confirms there's a little bit of a problem on this chart. More than likely the market struggles until it can clear this line and the previous topside resistance line right here. So until we can clear those lines, here's one of the many monthly charts I'm going to show you that seem to be telling us that we are struggling at current levels. Maybe to start expecting some type of a pullback. Now, sticking with monthly charts, if we take a look at the FXI, the ETF that tracks the Chinese market here in the US, we can also see that there's an argument here that on the monthly chart it is coming back to test the recent break of the highs of 2015. And so if we draw a line from here, again, I call this method the uniformity method for those of you who are new to this, and you can check the video description for a link into this method. But what we see here is we are coming back, and I think we are stalling. We are trying to break above this line. So far it seems to be a problem. The more this line is being rejected, the more it suggests that the next major direction or swing trade direction is going to be down, as long as we see resistance on this line. Now if we take a look at the Chinese market itself proper, we can see that if you take the lows here, once we broke below this line, again 2015, during this pullback somewhere here, this market is coming back and trying to move above this line over the last couple of months, or something like that. We've been unable to move above the break line going back here. So we can see that yet another world market that is showing monthly chart struggle above current levels. The more we find it difficult to move above this line, the more we are going to have to pull back. Take a look at the Hong Kong market, and again we come back to this recent break, and once we broke below here, we haven't been back to those levels. So we take that information using the uniformity principle, and you can see that we've been struggling to hold above this line here and here. So as long as this is being confirmed as resistance, it suggests that the next meaningful swing trade is lower. Unless the market can clear that line, one can still be looking towards a potential pullback or even a bear market of some kind. Take a look now at the Singapore market, and again I noticed all of these charts have the same look. This was the break of the highs of 2015, We are coming back here in February 2017. We seem to be struggling to hold above that level. As long as that is confirmed as resistance, we can start looking for a pullback or some type of a bear market move, unless the market can move above that line. So unless we can clear and trade above that line, the more we are struggling to hold this line here, the more we confirm resistance, the more it suggests we should start looking for major pullback as far as the Singapore market is also concerned. Take a look at the KOSPI, the South Korean market, and here we have also topside potential RSI resistance. We are coming here. We seem to be struggling to hold above that topside resistance line. There's also another view of this if you go back to the break in 2008. So this break here brought the market lower. We went into a major drop period. So you take that information and use the uniformity line, draw the horizontal line right there. Now you'll notice there's a period the market did well, which is this period here. Once the market cleared that blue line here, we traded higher. And it's only after we moved back below that blue line here that the market dropped during this down month. Ever since then, this market has been struggling to hold above the blue line. Lots of uniform action rejection, hence why I call it uniformity. Uniform action rejection here for this monthly highs. Uniform action here. Multiple resistance levels there for the highs. Resistance here on the RSI, price highs, resistance here, on and on, price highs. Uniform activity rejection here for these highs. And now over the last couple of tries here and here, we seem to be struggling on that line. All told, as long as we are seeing rejection on the blue line and the black line, chances are until we can clear and trade above this line, it looks like we are looking at resistance, again suggesting more than likely to start expecting some type of a pullback. Again, we take a look at the Japanese market and we can see that the Nikkei, just like the other markets we've discussed on the monthly chart, it's coming back, and you can see backtest failure as we begin the month of February. So this resistance here is causing a problem, and also we can consider this also uniformity resistance territory based on resistance from the previous break, which goes back to this recent break. Once the market broke down here in 2015, we are coming back to test that break line. So that's again is uniformity. Check the description for a link describing what I mean by that method called the uniformity method. But you can see resistance here is already starting to take shape. The more this is confirmed as a resistance, the more we can start anticipating that the next major swing trade is going to be lower. Combine that to the previous line, which is the backtest line, and you can see that there's a lot of evidence here that until such a time as the market can move above this line, chances are this is good enough visual evidence to start positioning for some type of a pullback, maybe even the beginning of a major bear market. If we take a look at the Nifty, we can see that at the highs here, the highs came on exactly the same type of analysis we've been discussing here, which is this break. This break here brought the market off the highs of 2015 there, and we had come and tried our best to move above that line in 2016. You can see what happened here is the market rejected that idea of the highs here. We had a multi-month pullback, and now we are coming back to test that same level. So depending on whether we can clear the blue line or not, might gauge the next potential major direction. Keep in mind I discussed the last couple of series of weekend analysis videos that also we got this topside RSI line coming in play. So the more it can clear this line, the more the Nifty might have a chance of moving higher. One thing I can point out here is so far it's been holding back above RSI 50, which is what the bulls wanted to see. Keep in mind on the daily, You'll notice that the RSI continues to hold above 69.1. That's a sign of a stable to good market. Also, don't forget that as we begin the new week, problem here is we recorded an improvement in short-term highs on the hourly, but the RSI made a lower high, so that negative divergence might set the stage for a pullback. If you take a look at the weekly for the Nifty, I think it's coming back to test potential RSI resistance again. And one can see this if you go and take a look at a 3-year weekly chart. You can see potential for resistance at current levels on the RSI because this was where it broke down off the highs of 2015. So off the highs here. We take that information and draw our uniformity line. You can see that we try to move above the line even early on here and were rejected. We moved above this line here, which is this movement. We stayed above that until we moved back below it here, which is this period. Since then we've been rejected here for these highs, and now we are coming back to test this line. So week to week, if this is confirmed as resistance, then that suggests that now after a nice move off the lows here, chances are we might be pulling back at least for some couple of moves lower. If this is confirmed as resistance, one can expect a pullback. Otherwise, if bulls want to move higher, they need to take out that line of resistance that goes back to this break line of the highs here. So either we confirm resistance and pull back, or we move above the line of resistance. But from what I can see here, my personal feeling is that more than likely the market will struggle coming back to test this line. Until we move above this line, I would suspect the market struggles even as far as the Nifty is concerned. Now we can also see this if we take a look at the Bank Nifty. And what we see here is also the weekly chart. Again, 3 years weekly. If you take this break in 2015, which is the current recent highs here, just draw a line from there and you'll understand that this is where it is coming back to test that line. Failure to move above this line might suggest that we might be expecting a pullback. One thing I did notice here is the Bank Nifty is doing its best to break out. In fact, a closer view, one can see that at the close of the week, first week of February 2017, it is actually trading above the previous monthly closing highs. So right now it is breaking out, or at least doing its best to break out. Get that straight. Here, looks like a breakout there. Needs to hold above that. My only problem with it is the quality of the breakout is not that great. We would need one of the MACDs to be trading at 3-year highs. We would need the RSI at the very least to be trading above 69.1. So RSI is not at 3-year highs, not above 69.1, and none of the MACDs is trading at 3-year highs. So that's a problem. So even though it's breaking out, the quality is not there. And if you want to understand this, take a look at the description. Again, I'll have a link about this minimum requirement for quality breakouts. Otherwise, here we can see a breakout, but the quality is not what you'd like to see. In other words, I would suspect more than likely this one runs into problems. Keep in mind, we also discussed the idea that it is coming back to test the top side of this monthly chart. So if it can stay above this top side RSI resistance, then the Bank Nifty might continue on well and trade higher. But if it stalls and confirms resistance here, then that would also agree with the other monthly charts for most of the major markets we've been looking at, and also the fact that the quality of the breakout is not there. So I would not be too surprised to see this one stall, and also based on the weekly chart RSI potential resistance. So, I'll give it the benefit of the doubt to move higher as long as it is holding above this monthly closing high. So maybe give it a chance, but I just suspect the quality is not there based on not meeting the minimum requirements. And again, to understand those minimum requirements, check the description for an understanding of what we look for when we are looking for quality breakouts. Let's take a look at the Swedish market, and we can see here that the Swedish market also, just like other world markets that we've been looking at, the similar type of situation here. This was the break point in 2015 of the highs. So what we are doing here in early February 2017 is coming back to test that level. If the market can trade above that, then that's bullish. Otherwise, confirmation on this line and resistance around here suggests that the next major direction is going to be down. We've already talked about the French market over the last couple of weeks, coming back to test the break of these highs here. And this has already been resistance in 2015. As you can see, it was rejected here for these monthly highs, and now we are coming back to test this line. So bulls need to clear that line, otherwise failure to move above this line suggests yet again to expect a significant pullback as far as the French market is concerned. If we take a look at the German market, same type situation really. The break took place here in 2015, brought the market lower, and we are coming back to test that level there. We were rejected just like we saw for the French market at some point in 2015 there, which is these highs, and now coming back to test the highs. If we are unable to move above this blue line, chances are we are looking at a market that is due for a major plunge. Take a look at the FTSE. We've drawn two lines here over the last couple of weeks. Topside resistance coming in play. Bulls need to move this RSI above that resistance line and trade above it. So we need a breakout if the market is to record higher prices. So that's a clearly defined topside resistance line. And if you go back to the break here in 2007, late 2007, we broke down here, which is this period, for what was a major bear market period. So that information can be used in the current market. As you can see, again, we are coming back and we are trying the best we can to move above the line. So far, we seem to be rejected. So the more we get confirmed here as resistance, the more we can start looking at the potential for a major pullback, maybe even the beginning of a major bear market. Otherwise, those who are bullish and bulls in the market need to find a way to trade above those two lines. Otherwise, failure to break out suggests that, again, to expect a significant pullback. If we take a look at the Canadian market, we can see that it needs to break out above the recent all-time monthly closing high. And that would be a need to break out above this monthly closing high. Something it has yet been able to do so. It tried to break out last month, that was January 2017, and failed. The level to watch there is 15,625.73. So that's the challenge for the market. It needs to take out that previous monthly closing high if it is to see higher prices. Also, we need the RSI to trade above 69.1 if there is any chance of continue to move higher. One thing I do point out here is I notice the possibility of a backtest failure. In other words, take a look at this line. It's coming in play. In fact, let's take that stuff off there. So you can see, I think what's going on here is testing this previous break line. This line was instrumental in bringing the market lower off the highs of 15. We broke down here, which is this period. We are coming back to backtest that line. If this is confirmed as resistance, then chances are, especially if we don't get a breakout, chances that the next meaningful direction is going to be lower. Keep in mind, we've had a nice run. If you consider that we were trading at 1100 or 11,000 sometime early 2016. So we've had a nice run, failure to move above, failure to break out, failure to hold above the RSI backtest line suggests that we should still be looking for a potential pullback. Now, if we take a look at the Brazilian market, let me show you a couple of issues here that I've been discussing. Number one, this was the RSI high that corresponds with the price all-time monthly closing high. So this RSI level corresponds with this all-time monthly closing high. So let's draw a line using that tip, and you can see that it does show that right now we seem to be stalling on this line here, connecting these 2 points. So this high here and this recent high, we can see right now we are a little bit showing some struggle here. So that's one layer of potential resistance, but the main resistance is actually the one I've been talking about for many weeks, and something we are still watching to see whether it can clear that resistance. It's a simple line coming back to this break in 2010. So we broke down here in 2010 off the highs here. We draw a line from there, which is a uniformity resistance line. I'll draw it something like that. Every time we hit that line and are rejected with uniform RSI action, rejection here with uniform RSI action for these highs, rejection here for those highs, and now we've hit this in late 2016 and we are still struggling to move above that line as of early 2017. So what I'm saying here is, if this is confirmed as resistance, keep in mind we've come all the way from here to here. If this is confirmed as resistance and to be consistent with other charts across the globe, chances are we are looking at the possibility that the next major direction for the Brazilian market, until when it can clear above the blue line, the more this is confirmed as resistance, the more it suggests that the next meaningful direction could be for a pullback, maybe even a full-blown bear market. Woo! So be careful out there. Do enjoy the rest of your weekend and have a great week ahead. Otherwise, for Brock, have a great birthday on Tuesday. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Mwah.